You're with us here on a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. We are coming to you this Monday morning, and we're looking forward to that midweek holiday, aren't we, guys? Good morning.
Wow.
So, it's one of those lucky days, right? You have a day before and a day after. That's the holiday, yeah.
Absolutely. And Nigel has got a full schedule planned.
Absolutely. For this evening, I'm pretty much locked in.
But no reveal, right? On air, at least. All right. So, there is news over the weekend, which I think is important to address straight out the bat. And the big one is that the entire story about China reopening is fizzling out and pretty fast. So officially, we heard over the weekend, for the second time, I might add, the first time markets rallied on, did not believe that China will persist with its zero COVID strategy. This is important because we are now starting to hear from companies like Apple, etc., that production out of China for their products, iPhone 14, etc., is going to be constrained. But that's only the first of the companies we're hearing from. It also has an impact on commodities, and we'll talk about that in greater detail. Momentum towards India, both sentiment and momentum towards India remains very positive. And it's only kind of fair that we look at what's happening in China and look at what's happening here. So it's a very, very different picture here in India. Are we going to make that push higher? Once again, we made that push our push on Friday, which ended the market, which led to the market closing very strongly. And SGX is once again indicating a 90-point higher start on the back of a lot of things. 18,290 is where we are going to start at if you go by this rate with an hour to go for market opening. Guys, hi, good morning.
Hi, morning Prashant, morning Nigel. And the bulls are on top, right? I mean, at least that's what the market momentum is looking like. Both local and global cues have improved, and that's something that perhaps the street will take forward. So the buy on dip strategy is something that may continue to work, and that's something that has played out through the course of the last 1 month. For me, the biggest cue this morning is what happened with both SBI and Bank of Baroda's numbers. Now, I know that SBI and Bank of Baroda together don't contribute too much to the Bank Nifty, but the Bank Nifty in any case is just 500 points away from that all-time high. So I'm going to watch that very closely. Across all parameters, there was nothing to complain in SBI's numbers, whether it's loan growth, asset quality, margins. Of course, the stock is also at a 52-week high, so you need to keep that on your radar. But most brokerages have gone ahead and raised their earnings and target prices on SBI. So that's the big trigger for me, the big positive trigger, that is. The other positive trigger is that FIIs continue to buy in this market. And once again, it's for the 7th consecutive day that FIIs have put in money. Over 1,430 crores was put in the cash markets. Now, for the US markets as well, right? I mean, the Dow had a very strong session overnight. A 400-point rally is what we saw on Friday. And there are a couple of things. There's the midterm polls that the street will look forward to very closely. There's also the consumer inflation report that comes out on Thursday, and that will give a better indication of the Fed's next move and how the Fed will continue to fight inflation. So those are a couple of key points. But I reckon today the Bank Nifty is something that I'm going to watch very closely. And of course, the Nifty as well, just inches away from an all-time high. But let's see. Apart from the Bank Nifty, there's a whole other market to trade as well. So let's see how it plays out.
Inches away is exactly right. 2.5% away is what the distance was as of Friday's close on a new all-time high. So it could happen in a day, 2 days. But is this going to be that week, a 4-day week? We'll see. Let me just quickly outline a couple of factors. So the big news, as I said, was that China isn't reopening anytime soon. Why is this important? It's important because, you have commodities. Metals, for example, the metals index last week, Friday to Friday, was up, I think, about some 7%, 8%. So metals have seen this very huge rally. Copper prices, for example, on Friday saw a very large move. What happens to China matters for metals more than any other singular factor. There's lots of things which go into the mix, but China is a big driver. So that is point number one. The other kind of broader overlay is that it's the same, which is China is the largest weighted emerging market, and if money isn't going to China, and we've heard from large funds like Tiger Global, etc., and we discussed this on Friday afternoon, that they're not going to put more money into China. Where does the money go into? It goes into other large emerging markets like India, like Taiwan, and others as well. So that's the bigger macro overlay. It's not as if they're going to remain shut forever, but the expectation was that something is coming very soon, which is not going to happen. By the way, the Hang Seng opened lower, but it's higher right now. Chinese mainland markets like Shanghai Composite, Shenzhen, they are lower by about 1/3, 0.5%. Nothing large, maybe, things will be okay. The dollar index, there is one big positive and one negative. The dollar index lost 2% on Friday. It's the largest one-day fall since December 2015. And it's interesting, right? The price action, it could be because of positioning getting squeezed out, etc. But the fact is, we heard once again from the Fed chair last week in a very hawkish manner. And on Friday, last day of the week, and the jobs data, for example, on Friday was not dovish or anything, but you had the dollar index which fell. So prices are going in a definite certain direction, which is positive. I mean, you want the dollar lower, not higher, and that I think takes a lot of pressure off emerging markets. Brent prices, though, went up 4%. They've pulled back a little bit. They were almost 99 point something. They're closer to 98 now. But that bears watching. On Tuesday in the US, you've got the midterm polls. Midterm elections, and most polls indicated a divided House. So no real party, the Democrats or the Republicans emerge as winners. That's what the polls suggest. Big data point, really. I mean, the polls will be important and there'll be a lot of noise around it. But the big data point out of the US is inflation numbers. That's only on Thursday. Month on month, core inflation in the US is seen up about 0.5%. So we'll see. And that could be a big one in deciding whether in December the Fed does 50 or 75. Just a couple of levels. The Nifty swing high of 18,179 is the first and near-term hurdle. SGX is indicating we'll jump over it right at open. The next target in the Nifty is 18,300, which is around where the SGX is indicating a start. The Bank Nifty has 41,677 as the first level to take out. So that is, again, about, 400 points away from where we closed on Friday. And the Bank Nifty's recent low at 40,819 should act as a decent support. You're going to start higher. I mean, if you're a bull and if you've watched price action recently, you'd kind of hope that the market doesn't open that strong. It opens a little weak and gives you the opportunity to get in, or maybe even mid-session if there is a pullback. But I think the initiative is very clearly with the bulls. And this morning, 0.5% higher indicative opening on the SGX Nifty futures. Nigel, what are you watching?
Well, given the fact that the SGX Nifty is suggesting that we'll like to see a good gap up of around 80 to 90 points, I would think that buying the dip would be more lucrative rather than chasing this opening, because you're going to be starting off with a big gap up on that front. The Nifty trend, remember, it's intact. The 17,850, 17,900 level holds out. Then you're in pretty good terrain. And on the downside, that the 50 DMA at around 17,550, that seems to be the line in the stand. Now, the PSU banking index, that's going to do well today. But the Nifty bank, that was more or less flattish even in Friday's trading session, though the Nifty ended higher, thanks to Reliance Industries, which surged up in the final hour of trade. So we'll have to keep an eye on the Nifty bank. It's been biding a lot of time, actually. You should have been there at all-time highs by now. But it seems it's taking some bit of time. So let's see whether or not that index can come back up. The cash market flows, that's been rock solid. The FIs, they've been pumping in money for the last 7 trading sessions, close to 2,100 crores on an average, which is good news. The F&O market, well, we're getting some indicators which are rather bullish. The live indicator is the expansion on the premium on the Nifty futures. That went to around 77 odd, which is good news. The India VIX, that was hovering around 20 just a month or so ago, that's come down to sub 16, which is again a bullish indicator. And the FIs, everyone's complaining that they're net long on the index. Now, they're mildly adding some shorts. They added 4,000 short contracts in the ratio of 2:1, though they continue to remain net long on the index. Looking at the options data, though, there is writing that we're seeing at around that 18,200 and 18,300 call. So that's telling you that today we're going to be starting at the resistance zone. However, the 18,000 put the total open interest out there was 40 lakh shares, the addition. That's giving a sense that the 17,900, well, the bulls want to defend. So let's get straight to the levels. Support around 17,900. Resistance, which we're likely to open up at around 18,300. And two big sectors today. One is the PSU banking index. It's already up 40% in this year. But SBI and BOB numbers absolutely splendid. So that will be the one on the gaining side. But metals could come in for some cool off because there was hopes that there could be some relaxation on the COVID policies. That hasn't happened. So the metal index may be on the downside. But as I said earlier, chasing the gap up may not be a great idea. Buying the dip will be a better idea. Sonia.
Oh, absolutely. And it was a stellar credit growth that the PSU banks saw, right? I mean, across the board, and SBI was just perhaps a cherry on the cake this time around. And that's something that the street will take with both hands. A couple of things to track. You have a lot of earnings this week as well, although it is a truncated week. There's Divi's Labs, there's Tata Motors, there's M&M, Coal India, all come out with numbers this week. There are 4 IPOs that will open this week as well, starting from the 9th, where you have 5-Star Business Finance, and then on the 10th, you have 2 of them. Cummins Tech and Inox Green Energy that come out with their IPOs. And there's a huge supply of newly listed shares which will hit Dalal Street this week. A lot of the lock-in periods end this week. So there's so much to talk about. But purely for today, it looks like it's going to be a big gap up opening. And do keep an eye out on the Bank Nifty, which is, I think, less than 600 points away from the all-time high. But let's get you some commentary as well. First up on the equities front, you have Surendra Goyal of Citi, who says that the consensus Nifty EPS revisions have been in a downgrade trajectory since June 2022, a trend he believes is unlikely to reverse. Their take on the festive season is that it is more mixed and a more hawkish US FOMC could spell a tough FII flow outlook. DIIs have supported the market in this calendar year, but valuations at one standard deviation above the mean on an absolute basis and decade highs on a relative basis leave little room for upsides. In his view, Citi's sentiment indicator also suggests a limited 12-month forward return.
All right, that's Surendra Goyal of Citi. Always well worth hearing and watching. Well, let's get you some money market views. B. Prasanna of ICICI Bank says the dollar paired gains arising out of Fed hawkishness by the end of the week on position squaring after mixed job data. He says Asian currencies rallied with the yuan on expectations of China reopening from lockdowns. The rupee recovered on risk-on sentiment and FII inflows. He says the dollar will take cue from important US CPI print this week. He expects the dollar INR pair to trade in a range of between 81.5 to 82.75 this week.
And on the bonds today, you have B. Prasanna, who says that global yields drifted higher owing to a hawkish Fed and market pricing of slower but higher and longer policy rates. He says commodity prices, particularly crude, firmed up on expectations of China opening up, and domestic yields reacted upwards as well and would be watching out for key inflation releases this week. He expects the 10-year benchmark bond yield to trade in a range of 7.35 to 7.55% this week.
Well, we have a lot of stock-specific action that we'll be tracking for you in our top 10 segment. We'll get to that in just a bit, but just to run you through the list, we're looking at SBI, Titan, Power Grid, Britannia, Cipla, IndiGo Aviation, Marico, TVS Motors, Bank of Baroda, and Cummins. They are stocks that we are tracking on the back of positive news flow. In fact, all 10 of them.
All right, so that's stuff we will get to in just a bit. Steve Bryce is Chief Investment Officer at Standard Chartered Wealth Management. He's joining us right now to take some questions. Steve, great to have you with us here. So which way is the wind blowing this morning? Very near term. Risk on or continued risk on? Or do you think, gains will be pared back? Your sense?
So, obviously in the India market looks pretty optimistic this morning, but I think if we're looking at the global markets, still people are a little bit on the defensive, obviously following the Fed FOMC meeting last week, where they indicated that rates are probably going to go higher than the market was anticipating, even if it's at a slower pace, which it was being anticipated, obviously following the Wall Street Journal article. So that's really a bit of a challenge. The employment report on Friday clearly had some things for both sides of the argument, I guess, but strong job creation, upward revision to the previous month, still accelerating earnings, wage growth is still going to, I think, keep the Fed very, very focused on fighting inflation, and that's putting upward pressure on bond yields and obviously therefore putting downward pressure on stocks for the time being.
We've had a fairly strong run here in India, Steve. Do you think that can continue? And what could be the leaders in the next leg of the rally?
Yeah, so obviously the Indian market has done very well compared to the rest of the world. We are continuing to be overweight the local market there. I think the industrials still look pretty positive. A lot of people talking obviously about the China plus one strategy, so the geopolitical environment, if anything, might favor countries such as India, Mexico, and Southeast Asian countries as well, in terms of people saying, okay, we're going to need to redirect our manufacturing capabilities, or at least have a plus one strategy. So that's obviously quite positive. FII flows from an India market perspective obviously have been very weak. So this has been a domestically driven one. If we did see that dollar peak out, and I think it's too early to say that it has done, but if we did see that peak out, then obviously that would be a big positive for the Indian market as well.
Hi, Steve. The US markets have had a good run in the last month, 40 days or so. How much of the good news is in the price? Waiting for the midterm election, so that's going to be an important trigger. But how much of the good news is in the price? And if we don't get a favorable outcome, does the downside open up?
So we see this as a bear market rally still, right? So just from a macro perspective, we actually don't think that the outcome of the election is going to be that important, to be honest. It's almost a done deal that you'll get a split government. That means they're going to be very difficult to do anything. If anything, that's probably a negative in terms of, we get the debt ceiling coming up again in 2023. And if we did move into a recession as we expect, then you might get a slower than normal policy response. You'll still get it coming through, of course, because nobody wants to be responsible for a deepening recession. But that might be a bit slower. So, in balance, we think this is, obviously markets have done pretty well for a few weeks. But we wouldn't be buying here. We'd be saying, look, we think we can see some consolidation and maybe making new lows before we form the long-term base some point in 2023.
So, Steve, you believe he'll revisit those June lows on the Dow?
So we think we might go back and maybe even go lower than that, right? So we feel that the markets are not pricing in the earnings downside that we are. Obviously people are looking for around 7% earnings growth next year. We think it could actually be negative. On the positive side, of course, as rates adjust lower, which when a recession hits, that's likely to happen. Then that could help them from an valuations perspective. But I think there's still a transition phase of shifting from 7% to much lower earnings growth, which could lead that leg to breach the lows we've seen so far this year.
Steve, a lot of people here in India who've been to the US recently, and we've spoken with a bunch of them, marketing trips, etc., trying to raise money. They've come back and told us that the sentiment is, in a way, anything but China, right? And India, in that sense, is a big potential beneficiary. So on a relative basis, we've spoken about this optimism, this relative optimism, but for viewers who are watching, who are local investors, what does this mean in an absolute sense, Steve? Yeah.
Yeah, I think you're right. I mean, sentiment towards China is clearly very negative. The question is it peak pessimism as far as China is concerned? You saw just some speculation last week leading to a very sharp rally in Chinese assets. So if we did see an easing of the COVID restrictions in the course of the next 6 months, I think before winter, it's probably going to be a bit challenging, but maybe after winter, then that could lead to a very big leg up. But from an Indian market perspective, yes, I think people understand. I mean, from my perspective, I like the demographic story as well, much better than most of the world in India. And if you do see the manufacturing gap being filled in a significant way, then the Indian market could do incredibly well over the next few years. And with foreign investment coming in as well, that would be a big positive.
Oh, absolutely. And the foreign investment has picked up thick and fast, right, here in India. I mean, in just 6 trading sessions, the FIs, actually less than 6 trading sessions, the FIs have bought over 6,000 crores in the Indian market. So speaks a lot about the trajectory here. But we leave it at that, Steve. Thanks a lot for joining in and giving us your quick thought. That's Standard Chartered with their view on the markets. But let's slip into a quick break. So many stocks to talk about. The SGX Nifty indicating a big gap up opening. Some more coming up in a bit. Well, SBI is clearly going to be the stock of the day. Remember, the stock is at a 52-week high, but the numbers were spectacular. Goldman Sachs, in fact, said that this is arguably one of the best earnings that we've seen in this season. So let's go straight to Abhishek to tell us more about what went so right for SBI this time around. Abhishek, over to you.
Well, Sonia, to begin with, it's ticked all the metrics that you can write in the banking sector. So ROA has crossed 1% level, perhaps for the first time in the history of SBI. Bank has reported the highest ever quarterly profits, which led by the fact that loan growth is at 19-quarter high. Foreign business growth was robust. By business, I mean both the deposits and advances growing by 31.5% YOY and about 9.1% quarter on quarter. The net interest margin is one of the best in last 7 years, coming in at 3.32%. 2% with domestic net interest margin of 3.55%. The gross NPA ratio or overall the stress portfolio is one of the lowest that you are seeing in last many years. Gross NPA ratio being the lowest in last 7-8 years, coming in at 3.5%, and net NPA ratio perhaps for the first time ever has been below the 1% mark. ROA and ROE both are one of the best that you are seeing in last 7-8 years. In terms of PNL, both the NII and PAT is a beat to our poll. NII beat of more than 6% and PAT beat of more than 35%. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Let's go across to Mangalam. Mangalam, Titan's numbers look good. The problem is how much is in the price, right?
That exactly is the concern. You know, these numbers are solid gold, but just some of the shine perhaps is, is not sustainable going forward. If you just take a look at the numbers, 8,700 crores on the top line versus our expectations of 8,450 odd crores, EBITDA higher than expectations, and that has percolated all the way to the bottom line as well. The revenue beat, of course, was led by additional sale of gold ingots, which is recognized as other operating revenue, which has come in closer to 500 crores versus 200 odd crores. And the jewelry business saw one-off gains of customs duty as well as inventory gains in their diamond business by about 2%. So to that extent, the management believes that going forward, the margins in that business will be around 13 to 14%, as against the 15% that they've done. And investments in the eyewear business will also keep the margins a little controlled in the next half of this year. However, the festive season, the company saw 18.5 to 19% sort of growth. They've refrained from giving a Q3 guidance. The big question again is that the stock is at near all-time high. FY24 earnings, price to earnings multiple is 64 times. So yes, it is solid gold, but it's trading at the price of diamonds, perhaps.
All right, well put, Mangalam. Thank you very much. By the way, you can hear from the Titan management straight up in a bit from now. So Titan's CFO, Ashok Sonthalia, will be with us at 9:45 to take some questions in terms of sustenance of this very strong growth and a couple of other things as well.
So Mangalam said that it's trading at the price of diamonds, right? So we should be a bit careful because when you go in for resale, gold gives you a better resale than diamonds.
Well, so yeah, absolutely. And we'll put some of those diamonds and gold questions to Mr. Sonthalia of Titan a little later. Power Grid also reported numbers. Vaishta is here with a quick snapshot. Vaishta, hi, good morning.
Hi, good morning, Prashant. Well, Power Grid for Q2 FY23 been a steady quarter for the company, broadly in line with estimates, but there's been some mutedness in the capex spends, which have come in at 3,200 crores in the first half of the ongoing financial year. The revenues at 11,000 crores is up 9%, better than estimates of 10,700 crores. Margins have come in at 84.5%, a bit below estimates. The company has declared an interim dividend of 5 rupees per share. So all in all, seems like a good quarter. I would go with a green on the stock.
Okay, all right. Thanks a lot for that, Vaishta. Well, Mangalam, coming back to you. Britannia, numbers good, crunchy enough?
The numbers were crunchy enough, though there was some lack of crunch in the balance sheet. So let's talk about the P&L for the company. It's an inline volume, but across all other parameters, it's a strong beat. It's the highest ever quarterly revenue that the company has reported. Gross margins have improved both quarter on quarter and year on year. And the company's market share, which is an important metric, is at a 15-year high as well. They've gained market share for 38 quarters in a row. As a result of which, revenue is close to 4,400 crores. The street was working with a number of 4,100 crores. Margins at 16.3%. The street was working with a number just around that under 15% mark, and the net profit is higher by about 70-80 crores as against the street expectations. Now the balance sheet, the long-term debt of the company has increased by about 1,000 odd crores. But I wrote to the company and, company sources have told me that they've borrowed these 1,000 crores to fund capex in their dairy as well as greenfield projects in UP as well as Tamil Nadu. And the borrowing cost on this is 5.8%, which is about 200 basis points lower than their own treasury. So they thought this was prudent. However, the street is worried about them having raised funds to perhaps give out dividends to investors, etc. And part of which could be to help the promoters, etc. too. So these are things that we'll get clarification on as the company starts its conference call at 9 a.m. just some time from now. So expect the stock to open in the green, but the gains would be perhaps limited.
Okay, so what do you say? Was it a good day for Britannia or you think it's 50-50?
Good day on the P&L and 50-50 on the balance sheet.
Okay, that summarizes it well. Thanks for that. Let's go over to Ekta now. She's tracking Cipla this morning. Ekta, over to you.
Thanks for that. Well, yes, Cipla will be reacting to its conference call takeaways, and I don't expect a big bang reaction really, because it was largely an inline set of numbers. Quarterly US revenue did very well. That was on the back of the cancer drug Revlimid generic contributing. But an important point is $175 to $180 million could be a base for the US business going forward in terms of sales, so that's important. They aim to launch the inhalation drug Advair generic in the second half of FY23. Brixon, which is a cancer drug, the generic version, could be delayed because of the Goa plant. That's what analysts are assuming. So the launch will be dependent on whether the Goa plant sees a clearance or not, but they've managed to site transfer it, so that's an important point. They've maintained the EBITDA guidance at around 21 to 22% for FY23. That's on Cipla, but just watch out for Zydus Life, because their Marico plant has now received an establishment inspection report with a voluntary action indicated status, which basically means that they can now successfully supply to the US from this particular plant, and they were issued a warning letter in 2019 which effectively would be lifted on account of this status. So positive news coming in for Zydus Life.
All right, thanks a lot for that. We're also tracking Interglobe Aviation this morning on the back of good numbers. In the sense, the revenue growth was very strong because things have come back. The whole space has opened up post-COVID. The margins continue to be under pressure, but that's because of higher fuel costs, forex, etc. But the yields, if you look at it, were very strong, up almost about 21% year on year, coming in at a little over 5 rupees. And that's something that the street has latched on to, hence I'm going with green there. Revenue growth has also been very good, 121% growth that we're looking at, although the operational performance is still under stress, and there is still a net loss that the company has posted in excess of 1,580 crores. UBS put out a note. They have a buy with a target price of 23.50. They say that the yields are holding out quite well and the company could fly back into profitability Q3 onwards. Because, things have improved, and even in a seasonally weak quarter, which was Q2, they had a decent operational performance, the highest ever ASK with the plant load factors coming in at 79.1%. The yields continue to remain very strong, and the key con call highlights was that demand is strong and the higher fares that you see. I mean, even if you take a Bombay-Bangalore, Bombay-Delhi flight, it's gone through the roof right now, but passengers are accepting those higher fares. So I guess that will result in better numbers.
This one is incredible, right? I think if you just take a look at IndiGo's quarterly numbers ever since listing and calculate, there's always something. I think this time there was a big forex item, as usually there is for IndiGo. But I think it would, there are very large losses, accumulated losses, but, the faith absolutely sky high on this one. Especially from the institutional side. But this is an interesting time because you've got all these. Tata's is making a very aggressive bet, right? They've said they're going to spend some 10,000, 15,000 crores on sort of upgrading their fleet, buying new planes. So competition is also coming up for the number one player right now, which is IndiGo. We'll see.
Escalating prices is a big thing. I mean, I was just looking at the Bombay-Bangalore flights on a Monday for 18,000. A return flight. Okay. I mean, but it's crazy, right?
Yeah, it's gone through the roof. Absolutely.
All right, let's get back to our top 10 stocks. And Mangalam is standing by to tell us about Marico. Mangalam?
Well, as far as Marico is concerned, just take a look at their numbers. Can't be more in line than this. 2496 crores on the top line. The street was working with 2490 crores. 433 on the EBITDA. The street was working with a number of 435. And the net profit just over 300 crores, exactly in line with what the street was working with. There was a mild beat in the domestic volume growth, 3% versus expectations of 1 to 2 odd percent. But the important part is year-on-year gross margins have improved, even if they've decreased a little quarter-on-quarter because of high-cost inventory. And that the company believes will improve sequentially going forward as well. In fact, in the second half of this year, they believe that mid-single-digit volume growth will continue, and they maintain margin aspiration of anywhere between 18 to 19% for this entire year. So in the second half, the outlook is positive. Let's see where the stock goes today.
Okay, and we're also tracking TVS Motor this morning because the numbers were very good. It was a very strong performance. The revenues were higher than estimated. Over 28% growth is what we saw. The volumes went up about 12.5%. More importantly, it's the fourth consecutive quarter of 10% plus margins for Hero MotoCorp. So that's something that the street will definitely like. Across the board, if you look at the internals, they have improved for TVS Motor, of the volume trends, the margin trends, and the management commentary has also been quite positive. If you look at those bar chart over there, volume has gone up substantially compared to the preceding 4 quarters, and similar is the case with the margins, 4 quarters of 10% plus margins. Where is this coming from? The management says that the premium end of the motorcycle market has improved quarter on quarter. In fact, they couldn't meet the full demand because of a limited semiconductor availability. So Q3 onwards, the supply constraints will ease. They will be able to meet full demand and realize the full potential, which means that the earnings will further improve in Q3. They've also made higher investments in all their key brands with the launch of the TVS Ronin and the new TVS iQube Electric, which has been doing phenomenally well. So I'm going with green on TVS Motor. The only problem is the stock has run up quite a bit. But Bank of Baroda is the other set of good numbers that we had. Abhishek is here with the latest. Abhishek.
Well, Sonia, it was a stellar set of numbers given the fact that ROA is again like SBI at 1% perhaps for the first time in last 7-8 years, and ROE at about 19.6% is perhaps one of the best that you are seeing in many years. So highest ever quarterly profit recorded by the bank at 3,300 odd crores. The net interest margin is one of the best in last 30 quarters, coming in at 3.33%. It has a one-off in this quarter. However, it is expected to sustain going ahead. So domestic net interest margin is one of the best in last 30 quarters, and international net interest margin has crossed the 2% level at about 2.17%. Perhaps for the first time that I am seeing an Indian bank having an international net interest margin of more than 2% in last 10 to 15 years. So gross NPA ratio is one of the lowest in last 29 quarters. Net NPA ratio is one of the lowest in last 30 quarters. Loan growth has been pretty robust at 19% YOY and about 4% sequentially, largely led by the international loan growth, which has been about 41.5% YOY and about 8.5% sequentially. So strong beat to our number. The numbers that they have reported have been a beat of about 14-15% to our NII estimate and about 30% beat to our PAT estimate. Back to you.
Thanks a lot for that, Abhishek. Well, Vaisa is back with us. Vaisa, tell us about Cummins.
Well, for Cummins India, excellent set of numbers coming in for Q2 FY23. All-round beat versus the CNBC-TV18 poll. The revenues were up 13%, though on the margins front, some pressure, though better than estimates. Margins came in at 14.8% versus estimated 14.1%. Domestic sales were up 11% year-on-year. Exports were better off 21% and contributed approximately 531 crores. The management says there is a sustained demand visibility across domestic and exports end market, but the management is cautiously optimistic on short to medium term demand. There's also been a strong performance in power generation within India, which contributes to the improved outlook. We await for more details in the con call, which is to be held today at 10.
Okay, thanks a lot for that. A lot of con calls to listen to later today, and we'll get you the key highlights from all of them. A quick recap in case you missed out on any of the stocks. Of course, SBI, Titan, Power Grid, Britannia, Cipla, Interglobe, Marico, TVS, all reacted to their numbers positively. Bank of Baroda and Cummins. Guess what? No stock in our top 10 list that's likely to open in the red, but let's see how it goes. Let's also get a quick handle on the world of commodities. Manisha Gupta is joining in to tell us more about that. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, after that very strong gains that we saw on Friday, some profit taking in the Asian markets right now after China reiterates to strict COVID containment approach. Also, the surge in US dollar is weighing onto the commodities. But even after this profit taking, we're still trading on the higher side on a week-on-week basis. So the crude oil prices hit a 9-week highs on Friday. We saw 6% of gains in the previous week. We've come off by 2%. So still on the higher side on a week-on-week basis there. Same case for the metal prices. Copper prices gained up by 4% on Friday. We are trading very close to those 2-month highs even now. Zinc and aluminum prices gained 4% on Friday as well. And we are trading with nearly 0.5% of a decline right now. Most of these commodities which gained on Friday, markets will, of course, watch out for the U.S. October inflation data in this week. There's U.S. midterm elections to react to. So the U.S. dollar index is strengthened. That is what will tell you on where the commodities go for.
All right, Manisha, thank you very much for that. So commodities in focus. We'll take a break here. We are back. Prakash Devan is going to be joining us next for some stock-specific talk. We'll also be joined by Krishnan ASV of HDFC Securities, who will discuss SBI and Bank of Baroda's second quarter earnings performance and possible stock reaction on the other side. Stay with us.
Welcome back. Well, the SGX Nifty is suggesting a big gap up, and the sector in focus will be the PSU banking space right up. We have Prakash Devan who joins in. Hi, Prakash. Morning. Well, wanted your quick comment. The PSU banking index has been the best performing index in 2022. It's up close to 40%, and today it's easily going to put on a couple of percentage points. What's your sense now? Do you believe bulk of that re-rating is done? Do you have a pick in this PSU banking space?
Good morning, Nigel. So I think, the good times have probably begun. I mean, this is the first quarter where very convincingly we've seen performance improve on all, across the board on all metrics for most large PSU banks, right? The ones that have come with numbers, BOP, SBI, Can Bank. And that clearly tells you that what they have started achieving, and the SBI chairman's statement of the remaining half of this financial year is saying we're still likely to expect 14 to 16% growth. And that is phenomenal, right? I mean, for a large bank like SBI to continue growing at that rate means that all the goodness that you see in the operational metrics will probably continue for at least the next 4 quarters. And remember, PSU banks go through this whole cycle of cleanup and then growth and then hyper growth and then again a bit of a NPA accretion. So right now we're probably seeing that growth phase start. So it's definitely good times. The last time we spoke about PSU banks, what's happening is for small investors who probably cannot risk putting money into just one stock and kind of wait for it to deliver in the next couple of years. It's better to go into a PSU bank ETF. That's I think the simplest strategy to follow, because at some point in time, even the smaller ones, the backbenchers of the class will also start contributing. So you have the likes of Indian Bank and Central Bank and Punjab and Sind Bank also kind of smartening up with a lag. But then you can also take advantage of that through this PSU bank ETFs. The top pick, of course, continues to be SBI, but then it's getting to be a consensus after yesterday's numbers. Very clearly, everybody is expecting anywhere from 15 to 30% upsides in the stock. There's nobody who's got a view that's negative or neutral. So that could only be the little bit of a dampener. But otherwise, I think SBI, BOB continue to be very good picks in that space.
Okay. In fact, most brokerages have raised both their earnings estimates and their target prices on SBI, right? So currently the stock SBI is what, less than 600 rupees. But most brokerages have 700 plus targets. Nomura has a target price of 690. Morgan Stanley is at 715 now, and I think the most aggressive on the street is Goldman Sachs. They have a 770 rupee target price. Just look at that. Okay, ICICI Sec is higher than that, 805. So big moves coming in there. We'll get you more commentary from the management in a bit. But Prakash, good morning. A quick comment on how to approach Titan now. Stock is at an all-time high, quite expensive, but numbers were not bad.
Good morning, Sonia. Good to have you back, and thanks for getting the green on the screen today. I think it's very clearly Titan has kind of come back into this whole numero uno slot on all counts. We've always seen every quarter, if you analyze the numbers, dissect the numbers, there was some segment which was always disappointing. This time around, you've seen all the segments contribute so well that all the synergies of the brand salience of having so many different product lines but under the same umbrella brand has started actually playing out. My sense is you'll probably see traction in Titan not only from the premium recovery, premium consumption recovery, but also from the broader consumption patterns that we are seeing. The other important thing in these numbers is that all the cost pressure that Titan had kind of been facing and struggling with for some time probably seems to have got digested, in terms of rental costs, in terms of wages and manpower and all of that. So effectively, what you're seeing is the operating leverage cycle to have initiated in a very distinct way. I think it could still be good to go for more. If you're holding it, of course, you don't need to complain. But a buy on dips is probably the best strategy, given the fact that it's always remained at premium. But whether you get a dip or not is going to test your patience. So be careful about that. But if you have to buy, you buy it now. Don't kind of delay it. Otherwise, you're going to buy it at expensive rates if the dip doesn't turn.
All right. Prakash, stay with us. Just coming back to you. State Bank of India is what we're going to focus on. Stellar quarters we've been highlighting. Asset quality, etc., also looking pristine. Ritu Singh, my colleague, and Abhishek Kothari caught up with SBI Chairman Dinesh Kumar Khara and began by asking him about the quarter gone by, how SBI sees growth coming in from retail and corporate segment going forward. Listen.
We have got visibility of either proposals in pipeline or one which are sanctioned already, awaiting disbursement. So all that is somewhere in the range of about 3.5 trillion plus as far as the corporates are concerned. So I expect that going forward, the kind of availment which has happened from corporates in this quarter will have the visibility of similar availment going forward, because corporates are earlier raising money from overseas markets. Now overseas markets have turned expensive, and with the hedging cost, perhaps it is much cheaper to borrow from India as compared to borrowing overseas. So that is something which is, I believe, it will help us in seeing the decent corporate credit growth also, apart from the retail credit growth which you have seen all this while. And infrastructure continues to be a major focus area. And apart from that, you know, the renewable energy is another very major area. And the PLI has also started showing good demand. So I think overall, I expect that that is one of the reasons why I've indicated that we should be in a position to see 14 to 16% kind of a credit growth.
Well, Mr. Khara, this is Abhishek Kothari this side. To begin with, you spoke about the credit growth. Now let's focus on the liability side. Is deposit growth a challenge for the system as a whole? What would your view be on the deposit growth trajectory for the system and for your bank?
See, as far as we are concerned, we have got some investments which are likely to be up for redemption in the current year, and it is as high as about more than 3.5 trillion as on 30th September when we have compiled these results, though it is even on the higher side now. So I think we would be in a position to unwind these investments and support the credit growth as and when this kind of a visibility will be there. And apart from that, at a system level also, I think the government, normally we expect that the spending from the government will also go up somewhere towards December, January. And that will also bring in more money into the system, and which will also address the liquidity requirement of the banking system.
So, sir, one question on the net interest margin. It improves sharply on a sequential basis. So, can the upward trajectory in your net interest margin continue in a rising interest rate scenario?
In the net interest margin, we have got one small exception, which is 592 crore is the interest on income tax refund. Though last year on a YOY basis, it was 1,792 crore. So I think this is one area which may not be there, but otherwise I expect that considering the lag in the interest rate when it comes to deposit repricing and also the asset repricing, I think we will have a reasonably decent opportunity to have decent margins.
So one of the business segment which stood out was your overseas business. Now there is slowdown in exports that we know. Do you see foreign business momentum to slow down going ahead?
We have got about almost about 60 billion balance sheet, overseas balance sheet, $60 billion US, and out of that $60 billion US, it is equally split into the local financing, the trade finance, and also the borrowing, which is ECBs. So I would say that if at all this is the kind of a growth which we have registered in rupee terms, but if we look at the dollar term growth, it is about 18%. So I think as far as the ECBs are concerned, we expect it to slow down a bit. But as far as the local borrowings are concerned, and also when it comes to the trade finance, I think those opportunities are normally in the overseas geographies, and our major geographies are USA, UK, and Hong Kong and Singapore. So these are the major geographies where we are lending. And apart from that, TCBs, we are normally parking in the gift city. So that's how the whole split is. So I think what I expect is that as far as the USA and UK are concerned, there should not be any major challenge, and because we are in any case, we are participating in the syndicate deals. We are not as much into the bilateral deals.
All right, that's the SBI top management, Dinesh Kumar Khara, talking to us about the results. Krishnan ASV's lead analyst, BFSI, HDFC Securities, he's joining us to take some questions. He's been positive SBI for a long time. Krishnan, great to have you with us here. Thanks very much. How would you rate the earnings? One or two things which really stood out for you, And how is the stock performance from here likely to be? Go on.
Yeah, hi, very good morning, Prashant. So, I mean, spectacular set of numbers, a bumper quarter. What was surprising was asset quality continues to be fairly benign. So it's just a reflection of where we are in the trade cycle. And the fact is, all of this is happening despite the fact that there are no trading gains. It's a fairly weak environment for treasury portfolio. So just on core earnings, I think this is a bank which is now finding a fairly stable way to do a 0.8% ROA fairly quickly. So it remains the biggest elephant in the system. It's beginning to dance. It's obviously reflecting where the environment is. And we expect continued re-rating in SBI. Yeah.
Okay, the
It's
re-rating.
been a high conviction.
Sure. Sure. So I'm sure you heard the management as well a while back. What stood out for us is that there is about 3.5 lakh crores of loan visibility going forward as well. So it looks like this loan growth, this high teen loan growth is something that they can sustain. How much of this is in the price already? And what is your target price now? I mean, would you raise your earnings estimates and target price on the stock?
So a little bit. As of this morning, we've already been public with our estimates, and so we have made some changes, some tweaks to our FY23 numbers, and that essentially means our target price now settles at around $700. We were at about $670 earlier, so it's about a 4% move from there. But yeah, I mean, in general, Sonia, I think the system is growing 17%. You can't have SBI, HDFC Bank, ICICI Bank all growing at 20%. Right, so something will give. I think the environment. We believe for a growth will essentially leave off of maybe 2 or 3 percentage points. So in general, we are working with about a 15% credit growth number for SBI. I think that we are currently overshooting that for SBI. Yeah.
Hi, Krishnan. Morning. SBI's numbers are good. What about Bank of Baroda? If the elephant's going to dance, the music's going to play. Will the other ones as well dance?
So as I said, the benign credit cycle is not going away. You have seen CEOs after CEOs telling you on the earnings calls that we never know. I mean, we don't know when this music might stop. So maybe another 6 months to go, and there are a lot of other PSU banks which are sitting on significant surplus liquidity, right? So they have a little more elbow room available to them compared to the large private sector banks. Private sector banks have to go out in the market, raise money, only then they can probably lend. So yeah.
Okay. I just had one question on how the corporate part of the portfolio is looking, because the commentary that we got from a lot of small PSU banks is that the corporate stress has gone down in a big way. UCO Bank was telling us, that last week as well. How are you looking at it now? And in terms of asset quality, what do the trends look like for the PSU banking space on the whole?
Very benign asset quality trends right now. I mean, so much of the bad news has hit the ceiling and the roof in the last 3, 4, 5 years that, post-COVID, there was a risk-off environment, hardly anything to lend. So, of course, we are in a sweet spot in the cycle today, Sonia. So there's no denying that. Only caution that we are raising, we are flagging is we don't know how long this will last. So.
Okay, so you need to be mindful of that as well. For now, there aren't any red flags, but will momentum continue, sustain is the big question. Krishnan, great to have you with us here. Thank you very much for your time. Appreciate it as always. We'll take a break here. We are back. Mitesh and Sudarshan join us for technical trading ideas on the other side. And Prakash, of course, is still with us, and we'll get back to all of them in just a bit.
Welcome back. We have a couple of minutes before we open for the day, and looks like it's going to be a big bang opening. Mitesh Thakkar of earningwaves.com is with us, and in a bit we'll get Sudarshan Sukhani as well. Gentlemen, morning to both of you. Mitesh, let me start with you. More than the Nifty, my eye is also on the Bank Nifty, which is now, about 500 points away from an all-time high. Just give us a sense, what is the strategy purely for today? Do you chase this gap up? Do you wait for a dip? And what's your view on the Bank Nifty as well?
Good morning, Sonia. So I think I'll start with the Bank Nifty in focus. Now, I'm just recollecting the recent history. On the 15th of October, we got a high of 41,840, and before that day, the closing was 41,400. Similarly, on the 20th of, this is September. And again on 20th of September, we got a high of 41,700 and a closing of 41,468. And in the last few days, the highest closing which we've got is about 41,350 kind of zone. So this 41,400, 500 zone, we have not had a closing since the last decline. And it looks like a level which could be crossed with a gap up opening today. Now, once that happens, I think I would want to chase the Bank Nifty to begin with instead of the Nifty, and take yesterday's high as the stop loss. This breakout should see the Bank Nifty attempt the all-time highs, possibly get beyond them, and even try to target levels beyond 42,500. So very positive setup over there. Of course, the PSU banks have been doing very well, but with today's gap up, I expect other banking stocks to participate as well. On the Nifty, 18,350 is one supply pivot which is left. I think once we clear that, then I think 18,570, 600 zone should be tested.
All right, up and up, very, very strong momentum overall. Good morning, guys. Sudarshan, what about you? How are you looking at things?
Good morning. See, Prashant, we have been upbeat for the last week, and the idea was even on Thursday when a gap down was imminent, buy the gap. That view continues to remain for the Nifty. Buy all, even if we have a gap up today, which we should, that's a buying opportunity for those who still do not have a position. The Nifty has two levels. The first is 18,200, which it's likely to cross today. That's the border of a small consolidation. So I think once that is crossed, we are heading towards lifetime, a test of lifetime highs at 18,600. So most people should become positional traders, accept small dips on the way, and look forward to 18,600. Short-term, very short-term traders can take a trade today and plan to exit either tomorrow morning or tomorrow afternoon, but be on the long side. Now, I have a different view on the Bank Nifty. The Bank Nifty has been in a consolidation for 7 to 10 days. Now, following the Nifty, it's likely to break out, but I believe that it could underperform, so I would prefer to focus on the Nifty.
Okay, we'll also focus on individual stocks, right? Sudarshan, I wanted your view on that, SBI, Titan, Britannias of the world. But we'll do that in just a bit. Take a short break. We'll also have with us Tarun Sani of Triveni Engineering.